Good morning. It's Market Day Report. Welcome to a Friday. All right, Tammy's already mentioned it a couple of times. World Ag Supply Demand Estimate set to come out 12 o'clock Eastern. We'll have those numbers for you, and we'll have some pre-report estimates as well. But first, let's see how we've been trading in the overnight session. And how about we start with the corn market? Now, corn yesterday finished the session in higher territory, breaking out of a two-day losing streak. And in the overnight session, 421 and a quarter, penny and a half higher, all contracts in positive territory. The entire soy complex was higher yesterday, breaking out of a two-day losing streak, but back into the losses in the overnight session, just a half penny lower, though, at 10.33 in a tight trade range. What about soy meal contracts overnight? Mostly lower. Bean oil contracts overnight were higher. Now to the wheat market. Wheat also breaking out of a two-day losing streak yesterday, but December in the overnight session at 418 and 3/4, down 2 3/4. Hard red down 3 3/4, 506 and a quarter. Spring wheat contracts were mostly higher in the overnight session, and the cotton market down 33 at 66.39. Brian Hoops is president, Midwest Market Solutions. All right, Brian, is our focus right now really on that WASDE report, or could there be anything else we're watching?
Good morning, Tony. Yeah, most of our focus is going to be on WASDE this morning. We've rallied yesterday, corn and soybeans, going into this report, anticipating a friendly report. So I think we've probably already traded the average trade guess, which is about 2.5 bushels less per acre for yield for corn and 0.3 of a bushel for soybeans. So I think we've dialed that in. We need something fresh, something new to push us one direction or another. No changes in the yield would be a bearish surprise, of course. To get really anything more bullish than that, we're going to have a bigger yield cut in both the corn and the soybeans. Wheat is probably not going to have that much news really focused on here this morning. In fact, we may be looking at the world ending stocks numbers for wheat direction. We expect to see production increases in Australia, Argentina, Russia, Ukraine. All those countries are going to have bigger crops this year than previous years. That'll increase world supplies at a time we really don't need more supply of wheat. So that could be a little detrimental to the wheat market. We'll certainly keep an eye on those main things. There was a flash sale this morning, but it's not what we had hoped for. It was only 22,000 metric tons of soybean oil, and that was to South Korea. So it wasn't a corn or soybean sale. We haven't had anything this week other than this bean oil sale. And we have a note but crush report out Monday, and we're already starting to see a little positioning to have that report. You look at the overnight trends with meal lower, soybean oil higher. We expect to see another month of record crush for soybean meal, meaning more meal supplies, putting pressure against meal values, spread against oil share, which have very tight stocks of soybean oil.
All right, good points there. And by the way, we'll have some pre-report estimates on this WASDE for you a little later this morning. We'll take a break, be back in a moment, find out whether Packer bids have been accepted in the South. Market Day Report continues in a moment. So cash cattle started the week in the north at 238. Obviously, less than what we'd seen last week. It did move up to 240, so we did see that in the north. But in the south, they wouldn't take the bids at all. Asking prices moving higher. So right now, the bids for 240 in the south, I don't think there have been any takers at this point. Be interesting to see what happens. Could be the first time in recent memory that the South trades at a premium to the North in cash. Now to live cattle futures, and we've been higher for 2 straight sessions here. October, $1.25 higher at 232.40, and the December contract at 234.25, $1.57 higher yesterday. Now, 1 week from today at 3 p.m. next Friday, we'll get a cattle on feed report. And We've had a few surprises along the way, but not expecting many for this upcoming cattle on feed report. Feeders yesterday 210 higher as we settled at 355.30, 352.60 on the October, up 220, and the hog market higher for 2 straight sessions. Remember, it had a run of a higher trade 10 out of 11 days. Took some breaks, some mixed trade, and we really had mixed trade yesterday, but mostly higher, 98.17, up 135. Brian Hoops is president, Midwest Market Solutions. Kind of an interesting setup here on the cash cattle trade this week. Could that really set the stage for the rest of the trade?
Yeah, the point you made was spot on about the South trading higher than the North. You know, it all spring into the summer, Northern supplies were much tighter than the South. In fact, we heard a lot of cattle being traded in the South and moved into the North to be slaughtered, and that seemingly has flipped. It seems like now the numbers are much tighter in the Southern plains than what they are in the North. So we may see that trade steady or so in the Southern plains after $2, $3, $4 losses in the North this week. And on a dress basis, we saw some trade on Tuesday that was about $5 lower. Now we're starting to hear a little bit of more trade coming in, maybe $7 to $8 softer on a dress basis. So definitely softer trade. Most of that's going to come up north, and we'll see if we can get some southern trade developed some point today. Now, you did mention the cattle on feed report a week from today. The estimates I have looking pretty friendly as far as placements go. We're still going to place maybe 8 to 10% less than last year. We're still not placing a lot of cattle. That should be very friendly to some of those deferred contracts in the cattle market, the December, February contracts, maybe April as well. And that will support us, even though we're seeing packer margins really start to slip. Our cutouts are down about $10 on the week, and cash trade softer this week. So it puts our packer margins that were over $100 positive about a week ago, just barely hanging on to just $1 or $2 positive at this point in time.
All right, Brian, always great to see you. Enjoy report day and the weekend. Brian Hoops is president of Midwest Market Solutions.